Welcome to Divorce Mortgage Strategies, brought to you by the Divorce Lending Association, where clarity meets strategy in the financial side of divorce. Whether you're a family law professional, a financial expert, or someone navigating the complexities of divorce yourself, this podcast is your go-to resource for trusted insight into how real property and mortgage financing intersect with divorce outcomes. We don't just talk about houses. We talk about strategic solutions that protect futures. Let's dive in. Today, we welcome host, certified divorce lending professional John Marroni and his guest, Regional Vice President with Cleary Insurance, Chris Hawthorne.
Welcome to another edition of the Divorce Resource Spotlight. I'm John Marroni, certified divorce lending professional and mortgage advisor. One thing I've learned through working with divorce and homeowners is that successful outcomes really happen by accident. They often happen because the right professionals are involved at the right time. In this series, I sit down with attorneys, mediators, financial professionals, insurance professionals, real estate experts, and other specialists who help individuals and families navigate divorce and many financial, legal, and personal decisions that come with it. Today, I'm pleased to welcome Chris Hawthorne, Regional Vice President with Cleary Insurance. Chris has been a licensed insurance broker and advisor since 1994, helping clients build, manage, and understand their insurance programs with confidence. He holds the designation of Chartered Property and Casualty Underwriter and works closely with individuals entering the separation and divorce process to help ensure their insurance coverage reflects their changing circumstance. Chris, thank you for joining me today. To get us started, can you tell us a little about yourself, your background, and what led you to focus on helping individuals navigate insurance issues during separation and divorce?
Well, early on in my career, I owned a business, and it was at the same time that I recently married, starting a family, buying a house, and it seemed like every other check I wrote went to an insurance carrier. And I was a bit frantic because I didn't know what I was buying or why. And I was just doing what I was told. And I had a sneaky suspicion that when I needed coverage, it wouldn't be there. And now that I had a business, a daughter, a house in play, I have a lot to lose. I tried to find brokers that could teach me and help me coordinate and give me a sense of confidence in my program, and I could not find such a person. We eventually sold the business after several years, and my partner said, "You should be the broker you couldn't find." So I did that, and I learned that the reason I couldn't find that broker was the industry doesn't make it. They make home and auto, they make life, they make health, they make commercial P&C. They don't make brokers that coordinate a person's entire needs. And the my goal has always been to answer the need I felt of being educated and in control. So the answer to the question of why separation and divorce. Separation and divorce is a time where the financial well-being of both individuals can be in great danger due to the insurance being improperly set up. The devil's in the details, and with insurance, separation, and divorce, there are a lot of details. So this is an area where I feel like I can help people.
Oh, so speaking of which, so when someone's going through a divorce, like what are the biggest insurance mistakes that you see people make?
Well, the biggest mistake people make is that they wait until the divorce is finalized to start addressing their insurance. And so from the moment somebody leaves the premises or takes an auto into a different zip code, the financial well-being is in peril. And so the planning needs to start before somebody leaves the house.
So if someone, let's talk about that. Someone goes to another zip code and then something happens. Are you saying they're not covered?
So again, insurance policies are very name and location specific.
Okay.
And insurance companies are in business to make money, not pay claims. So if we give them a reason to not pay a claim, they'll take it. So as soon as the separation begins, we want to look at things such as the automobile in particular, where let's say there's John and Jane, and John moves to location B.
Okay,
And location B is in a different zip code. And let's say they move from Marblehead to East Boston.
Um,
East Boston is a more expensive territory. So if that car is vandalized or stolen, but still listed as Marblehead, the insurance companies will not pay for that claim. But additionally, and a bigger threat, it's one thing to lose an automobile, but a bigger threat is John moves into a household where there are other drivers. And now those other drivers can use John's car. Jane's in peril if we don't add those new drivers to their policy, assuming the car is titled in both their names. This can be galling to add the other person's new partner and their children to your policy. But if that car gets into an accident, you need to do that for the new coverages. There's also going to be a new residence. When John leaves the home, you need to set up renters coverage for anything that happens in the new premises. And then the umbrellas need to be reviewed because there may be temporarily new cars in the residences added. Another thing, once separation begins, looking at insurance such as life and disability, mailing addresses and bank accounts probably need to be changed. It's to make sure that those policies don't lapse. And very smart move is to get your hands on the original applications for the home and auto and umbrella and see what facts have changed and then report them.
okay. You know, it's funny when you talk about putting someone else on another policy. I remember when I got my license, you know, as a kid, late teens, I'd have my own car, my own insurance, so would my friends, and we drive each other's cars. So is that a problem?
So almost. If the car leaves and goes to a household with other drivers, the other drivers need to be listed. But if the other driver is out driving the car, and so the John and Jane are on the title of that car. John is in the new home, the new residence, and gives Jane's son permission to drive the car. That's okay. But if Jane's son that night gives his friend permission to drive the car, that's not driving permission.
Okay.
So it's perilous.
Wow. So all right. So clearly the timing of when someone should review their insurance policy, that's critical, because again, if someone's separated, and they move to another household, even though they're not divorced, or maybe they haven't even filed yet, but took on another residence, that would be the time to really look at these policies.
Yeah, I had the perfect example just on Tuesday night. A lifelong friend called to tell me they were about to get separated.
All right.
And she said, "What should I do?" And I said, "Well, we should sit down before he leaves. He's leaving. Before he leaves, and we need to map a plan through separation, ultimately in divorce. That is the way to do it. Unfortunately, it was never happened."
Wow. I mean, do you see any things that get overlooked that create problems after the divorce is finalized?
Yeah, and it's not pretty. Again, insurance companies are in business to make money and not pay claims, and so if the facts are skewed, there's their ticket out of the game. And so future drivers new drivers is a big one, new residents. But one thing that I wish people would consider is, let's say there's a 3 and a 4-year-old in play, and eventually they're going to become drivers, and one of the partners is going to have to be responsible for the additional premium. And that can be very expensive for 6 years. And it can lead to some nasty, just when things have settled down, this comes flaring up in the fighting. And I would suggest that should be something that is dealt with in the divorce agreement. Who's going to be paying that premium and what that premium is going to be. Another issue that's a pet peeve of mine is life insurance. Very often divorce decrees say that each one person's got to carry life insurance on themselves for the benefit of the other.
Yeah.
What I suggest is negotiate it so that the person who's the beneficiary is also the owner of the policy and pays the premium and has total control. And that financial consideration is made in the agreement for the beneficiary, the one who needs the money, on the death of that other partner who's still paying you. Another item is, let's say the original home is going to be maintained, and the person staying there, let's say, is going to be getting the home and in return paying the departing spouse payments as part of the agreement.
Yeah.
I would suggest that we list the departing spouse as a lost payee on the homeowners policy. That way, if anything happens, the partner who's depending on that asset for their future well-being is protected. And then finally, and this is one of the nastiest ones, people, they think about their beneficiaries on their life insurance policy, that their individual life insurance policy, and they typically catch that and they call and they change it. What they often forget to do is remember that if the other person had decent benefits at work on a group policy,
Yeah.
the employer keeps the beneficiary sheet that was completed at the beginning of the program, and that could have been 15 years ago. And then, let's say 10 years later, that employee dies, and the beneficiary was never changed. And so we've seen situations where, I've seen situations where they're even worse than this, where the employee listed a girlfriend that was long gone, and not even the original wife gets the payment. It goes to that person. But if the person who has the group benefits wants the new spouse and the new family, or somebody else to be the beneficiary, they got to remember to call their employer to change that.
Wow. Yeah. That's, you brought up a good point earlier where, with the life insurance, if they're not the owner of the policy, then they could change the beneficiary and no one would even know it at all.
And they do.
No. I mean, I can only imagine, the value of the right professionals involved during a divorce, right? So from your perspective, what should someone look for when building, say, like the divorce team, and how, like an insurance professional working alongside attorneys, mediators, financial advisors, CDLPs, and other specialists, like, help to create better outcomes working together?
Well, in most couples that I've encountered, one of them is the dominant planner or has the advisors, such as the insurance agent, the banker, the accountant, mortgage, financial planner. That team needs to be rebuilt for the other spouse. And at least from the insurance perspective, the non-dominant person in the financial planning I believe, needs to get their own insurance broker.
Yep.
And it's not unheard of for insurance brokers to work in concert to serve their clients. I'm responsible for her financial well-being. He's responsible for his financial well-being, but that doesn't mean we can't communicate and make sure that things are mutually acceptable.
Okay. All right. Well, so Chris, thank you for sharing your insights today. One thing I hope listeners take away from these conversations is that, divorce is really a process anyone shouldn't navigate alone. Having the right team can make a tremendous difference. So Chris, if someone would like to learn more about your practice or connect with you, what's the best way for them to reach you?
They could certainly call me at 617-308-0033 or email me at chawthorne@clearyinsurance.com. And I have an article that I've written on this topic that covers this thoroughly. If anybody would like to get a copy of it, I'd be happy to send it.
Oh, that would be great. That'd be great. And thank you again for joining me, and thank you all for watching and listening. And if you found this conversation helpful, please follow the future Divorce Resource Spotlight episodes, where we'll continue introducing professionals who help individuals and families make informed decisions during and after divorce. I'm John Marroni. Thanks for watching.
Thanks for joining us on Divorce Mortgage Strategies, powered by the Divorce Lending Association. If today's conversation brought you clarity, insight, or inspiration, we encourage you to subscribe and share this episode with others in your circle. For more resources, or to connect with a certified divorce lending professional in your area, visit divorcelendingassociation.com. And be sure to download the free Divorce Strategy Hub mobile app for tools, education, and support designed to guide you through the financial side of divorce. Until next time, remember, in divorce, the mortgage isn't the problem, it's the plan.